All right. So hello everyone. I'll quickly introduce myself and FinRight, and then I'll get into the presentation.
Neil,
So
you have to let me introduce first.
sorry. Sorry. Go
Yes,
ahead.
I have to introduce you too, and I have to, there's only just the first 5 minutes that I get. So I'm going to use that because this is a very special conversation that we're having. I mentioned it in my post. It's really true. I reached out to Neil. It was literally a 3 to 5 minute conversation. I told him this is what we do, and I think this is a relevant conversation. And I was so grateful, Neil, for you to doing this for all of us in the room, simply because I think many times these conversations are not put out upfront. And it's very important that platforms like yours and you all coming in forward and sharing this, talking about it openly with everyone, how to solve this is extremely critical. Just to introduce Womoneysta also to everyone, we had many new people signing up. Also to tell you guys, this is possibly the first session in the last 5 years which we have opened out to both genders. I know the men in the room will be very upset with me, but generally, I must tell you that Womonista is a women first financial wellness platform. Why do we do this? Basically, the thought is to make financial decisions more inclusive on dinner tables, which has not been the trend for many, many years. We've been doing this for the last 5 years, and what we have noticed, financially confident, it does penetrate to the next generation, and it's a generational shift. Of course, the men in their lives play a very critical role. They play the role of allies in helping them move forward in their financial journeys as well. So it is not something that we overlook. What all do we do as a platform? We not only look at courses, community, and webinars like the one you're attending, we also now have one-on-one financial consultations. We also do manage the wealth of a lot of our clients who do want that service. Interestingly, we are probably one of the few platforms in this country which has upwards of 90% wealth of women that we manage, and the men have come in through the references of these women. So I'm very proud of that fact. And of course, I think something that we do focus on is constantly breaking barriers, bringing conversations which are very important on the ground, to help everyone in the family overcome any sort of financial challenges that they're facing. That's a little bit about us. If you want to know more, please do scan and check out the website, share it with any female friend in your life who does want to build more financial confidence. Bring her in, be her ally. To all the men, to all the women in the room, please share this as an extension of a sisterhood, which was really been waiting to happen. So that's a little bit about Womanista. Would also love to introduce our speakers for today. Neil is our speaker. Ketan is our man on the ground for the day. So Neil comes with a great expertise in personal finance. He was the ex-editor at Mint. You might have seen him on LinkedIn. If you are following any sort of financial news, you cannot possibly have missed his opinions, his insights on it. And he is now heading the personal finance platform called FinRight. So we're going to have Neil now share with us all details, everything that you need to know about EPF. So Neil, over to you. Now is your time to start introduce yourself and start the session.
Thank you so much, Neha. Um, so I'll give a bit of background on myself and one of the big reasons why I made the shift to FinRight, and our content platform is actually called the Fine Print,
FinPrint. FinPrint.
FYNPRINT. Yeah. And about a year ago, I was interviewing someone who had terminal cancer about their last stages in life, how they're planning for it, financially speaking. And in that process, in that conversation, he told me that there was some money that was stuck in his PF account. And despite being in this state and applying for it over and over again, he was not able to access his money. And we wrote about it. The article went viral. the EPF department got in touch and they gave him his money. Um, this year, a few months earlier, unfortunately, Naveen passed away. But perhaps the greatest achievement in my mind in my 6.5 years of journalism was helping Naveen get some of his money back so that at least those last few months of treatment, of family expenses, etc., were helped. So that was my trigger to move out of a large a mainstream newspaper and to start, or rather to join Finwrite in this new journey. So because Finwrite is one of the very few companies on ground which actually help people with PF problems. Usually people go to the HR department shuffles files here and there. They say go to the consultant. It's not a nice experience. So so that is sort of a bit of my history. What we do at the Fine Print, of course, primarily is provident fund withdrawal, which is done by Finwrite. So the reason why there are two names is because Finwrite is the operating company which does all of uh, the business, the reclaiming of money, etc. And Fine Print is the content platform. We write about things. Um, now, apart from Provident Fund, we do two other things. One is wills and estate planning. So anyone who has that requirement, happy to help. And the third is global investing. So um, one of the things we think is a huge problem in India today is that all of us are highly concentrated in just Indian stocks. And that leads to two kinds of problems. One is that the rupee keeps depreciating, as you would have seen in the headlines. The other problem is that Indian market doesn't always do well. Again, last year is the case in point. So we have done a fair amount of research and engagement with Gift City, and we think that Gift City offers a pretty promising avenue for diversification, apart from the other avenues also like mutual funds or you can have direct broking accounts. So our idea is to build a concierge that takes you through all of the options for global investing. And we have a community for global investing as well on WhatsApp. So if anyone's interested, I can pass the details to Neha and she can give them to you. Um, so with that, let me take you through EPF. What I'll do is I'll give you an overview, and there are many more technical things which Ketan is actually better placed to cover. So I'll hand it over to him to cover those and to take your questions. So just give me a minute, I'll share my screen. Everyone can see my screen, full screen properly?
Yes.
Okay, awesome, awesome.
Yeah.
So, super. So EPF essentially applies to all of us who are in organized sector employment. So if we work in a company with more than 20 workers, it is mandatory for that company to enroll in EPF, in the Provident Fund scheme. And we don't have a choice as employees, practically speaking. We are forcibly enrolled into it. Once we are enrolled into it, and enrollment itself is a big task. Usually, HR will hand you over a big, complicated form, and you have to make sure you fill it very correctly because one mistake in that form leads to rejections, as Ketan will tell you later. Um, so once you're enrolled into the scheme, your employer will contribute 12% of your basic pay. It's important to understand the distinction between basic pay and C2C. Normally, when you join a company, the HR quotes you C2C, cost to company. And basic pay is a fraction of that cost. So, just as an example, if your C2C is 1 lakh a month, usually your basic pay will be 20 to 30,000 rupees a month. Now, why is this? Because companies want to keep basic pay low because they want to keep deductions low because deductions like EPF and gratuity are linked to basic pay. Now, why do they want to keep the deductions low? Because keeping deductions low means keeping in hand high. And ultimately, most employees care about in hand salary more than they care about the complete total C2C. So, this leads to a sort of equilibrium where Basic pay is kept as low as possible, and in hand is increased as much as possible. All of this, by the way, has now changed with the new labor codes. So in 2020, the government passed four codes on labor, among them the code on wages and the code on social security. Now, as is the case with governments in India, they did not notify these codes for 5 years after passing them. But in this year, those codes have been notified just a few weeks ago. And I think the system is only waiting for some subordinate rules to come out from the government. And it is likely that most HR departments will switch to a pay structure that is based on the code on wages and the code on social security from next year, from next financial year. Now, what does the code say? Like, what does it actually mean for you on the ground, especially in terms of PF? What it essentially says is that your basic pay cannot be less than 50% of your C2C. So again, going back to the example I gave where basic pay was 20,000 and your C2C was 1 lakh. If a company were to interpret the code on social security in its full literal sense, then they would have to hike the basic pay to 50,000. That does not mean you get a pay hike. There are no free lunches in the world. So it just means that your other components will come down. The in a sense negative effect of a hike in basic pay is that the deductions go up because EPF is linked to basic pay, so that goes up. Gratuity is linked to basic pay, so that goes up. And again, that cuts down your in-hand pay. Now, before you conclude that it's all bad news, I also have some good news to give you. So, the EPF scheme has a rule which says that if your basic pay exceeds rupees 15,000 a month, 1 5, then the company has the option of restricting that basic pay or rather the PF deduction to 12% of 15,000. So using this particular, you might call it loophole, you might call it subsection, however you want to phrase it. Companies may not actually increase the basic pay to 50% of the total C2C. It all depends on the how the HR and that particular company is interpreting the code on Social Security. So your PF may not go up. Your gratuity certainly will, because unlike PF, for gratuity, there is no exception, there is no loophole, there is no carve out. Your gratuity is given by a formula that is linked to your basic pay. And when basic pay goes up to 50% of C2C, that gratuity also goes up. Now, does that mean that you get more money? Again, the answer is no. There are no free lunches in the world. It just means that your other component, and that other component usually is what is called the balancing component. So in your payslip, when you look at the components, there is basic pay, there is HRA, you might get conveyance allowance, you might get some other allowance. And then when all of the allowances are used up, there is one residual figure in your payslip which is called special allowance. It's just a balancing component. So normally it is this component that will suffer if your basic pay goes up and your gratuity goes up. Now, of that 12%, so going back to the formula for PF, 12% is taken off your basic pay, 12% is matched by your employer. Both of these are part of C2C. So don't think of these as something extra is coming. It's just a way of splitting up your C2C. Um, so of that 12%, 8.33% goes to the pension scheme, the employees' pension scheme. Now, this pension scheme is I would call the ninth wonder of the world because it takes true bureaucratic genius to create something so terrible for the people of this country. Um, so, number one thing to note about the pension scheme is that it only applies to two kinds of people. Number one, anyone who has joined the workforce before the year 2014. Number two, anyone who has joined the workforce after the year 2014, but whose basic pay at some point of time was more than 15,000 rupees. I reiterate, at some point of time. So, in my case, for example, one of my employers had my basic pay as more than 15,000. And therefore, I have been enrolled into the EPS, the pension scheme. At the time, I did not know this. I had no clue. And so willy-nilly, I am part of the EPS. However, some of you lucky souls may not have been enrolled and may have had a higher basic pay. Now, the reason why this is an act of bureaucratic genius is because the EPS does not work like the EPF. So the EPF earns an interest rate which is quite good, 8.25% tax free. The EPS does not earn any interest. So when you open your passbook, you will find the EPS is just a series of contributions. There's a service history. There is no interest on it, and people get panicked that why is my interest not coming? And the answer is it doesn't earn any interest. Sorry. Um, so then what do you get from it? The answer, according to the government of India, is that when you turn 58, you will be eligible for an EPS pension, which is linked to a formula related to your number of years of service, and there's a dividing factor, and it gives you your EPS. But this formula, at the very highest level, if let's say you worked a good 35, 40 years in a company, and your employer has faithfully contributed your 8.33% of EPS, you will find that you are eligible for a magical pension of rupees 7,500 a month, which will get consumed probably in one nice trip to the Marriott or some other expense that you go for. So the reason why this is so low is again how the EPS works. So the EPS 8.33% is capped at rupees 1,250 per month, because that again is linked to rupees 15,000 that I mentioned earlier as the threshold. उसके ऊपर का जो 8.33% है, that goes to the EPF. So basically, there is no reason for the EPS to exist, especially for most of us who make a substantial or at least a comfortable living, who are not at factory floor level. Yet it does exist. We are part of it. And the reason why it's painful for us is because wrong EPS contributions lead to rejections on EPF withdrawals. So that's the broad scheme of things. There's also VPF. So in the days preceding, I believe the 2023 budget, people would love this thing, the voluntary provident fund. Why would they love it? Because you could max out your EPF. You could contribute 100% of your basic pay to the VPF, the voluntary provident fund, and earn a tidy 8.25, or back then it was even higher rate of interest tax free on it. Um, and so people, especially people who are paid a lot, were using this section a lot. The government, of course, wisened up to what was happening, and in 23, they introduced a section which said that if your employee contribution, remember in EPF there's employer and employee, in VPF there's only employee, so no company is going to match your 100% basic. If the employee contribution exceeds 2.5 lakh rupees a year, then the interest on that is taxable. So that kind of got closed. That loophole has been capped. There's another section also which says that if the employer contribution exceeds rupees 7.5 lakhs in a year, then the interest on that gets taxed. So both ways there are caps now. But for those who are still interested in getting more tax-free interest from EPFO, with all of its warts and pain points, this still exists. You can still do VPF. You can still go to your HR and say, I want to contribute more than what is deducted from me, and put money into voluntary provident fund. Interest, one of the most lucrative interests. So, I've criticized the EPF a lot, but it's hard to match this kind of tax-free interest in any other instrument. Is decided every year by the EPFO, but it's a politically sensitive decision, so they don't tend to reduce it much. Um, a lot of people don't see the interest entry in their passbooks for a long period of time, sometimes years, and they get fed up and complain online and so on and so forth. Uh, to which the solution is you just have to wait. You can't do anything. I mean, after a point, yes, you can do escalations, you can approach us, and we'll do the necessary grievances. But best thing to do is to be patient with EPF. A bit about tax. So number one, to make it tax free, you have to have 5 years of continuous service. By continuous, it is meant cumulative, actually. So if you have done 3 years in one company and 2 years in another company, yes, you will qualify for this. You have to just make sure that you merge the service, the PF balances. So because in the EPF system, if you don't merge, they are seen as separate periods of service and they will deduct TDS. So just make sure you merge it. There's a process to do it online. You can do it yourself or we can help you with it. Interest accrued after quitting work. Most people don't know this. So the moment you leave your job, the interest meter on EPF does not stop. It goes on until the age of 58. There is a misconception in the market that it only runs for 3 years. That is not true. In 2016, they clarified that this interest clock just keeps running until you're 58, but the interest is taxable. Now, the magic of India is such that the EPF system is not connected to the income tax department system. So the EPF itself will not deduct TDS if you have completed 5 years on this accrued interest after quitting work. So you will be under the very impression that this is tax free only, and I'm going to let it compound for years together. One day, I think the income tax department will in fact connect its systems and suddenly realize that, oh my God, there's all of this interest that we are not taxing, which we should tax, and then notices will start coming. So best way to deal with that is to yourself proactively offer this interest income for tax at the point of withdrawal. So let's say that you go on a sabbatical or you start your own business and decide कि अब मुझे नहीं I don't want to withdraw this EPF money. ठीक है, no problem. Let it compound for 3, 4, 5 years, but however long you want it to do. And then let's say you do need the money. At that point, when you withdraw it, show that interest of that additional 5 years as taxable income and pay tax on it faithfully so that you're clear, you're in the clear when it comes to EPF taxation. Um, Interest on, yeah, so 2.5 lakhs I already spoke about, 7.5 lakhs also I spoke about. Withdrawal. So currently, there is a very complicated set of rules on partial withdrawals. There are multiple reasons you can give: marriage, education, housing, health, family, emergency treatment. Each of these have their own sub rules. You can withdraw so much for health, so you can withdraw so much for housing. So this is an example: housing can get 36 times of your basic pay. Again, there are separate rules on whether you're buying a house or constructing a house, whether you're using it to pay off a home loan, whether you're using it to actually buy a house. And there are certain, shall we say, hacks to it. You have to just select the right reason. Sometimes people don't know. Like, for example, withdrawal to pay a home loan is painful because the money goes to the bank, and usually the APFO has a tough time connecting to the bank systems. So therefore, usually we advocate that give house construction as a withdrawal rather than repayment of loan. But all of this we'll take you through if you need to withdraw for housing. Um, the other withdrawal, of course, is complete withdrawal. So the one I spoke about just now is partial. Complete is if you have 2 months of unemployment, then you can take out the entire balance. As of now, right? So I'm coming to now what has changed. So, uh, as you would have heard the news some months ago, EPFO announced a new set of rules for withdrawal, where they said that up to 75% of your balance you can withdraw for any reason. Now, again, in bureaucratic fashion, they can't say any reason in the drop down, so they use the word special circumstances. You don't have to define what the special circumstances are; they are special to you, and you can take out 75% of your money and use it for whatever mutual funds, uh, whatever investment you want to make in life. Um, Now, taxation is a bit of an issue because if you're doing this before 5 years of continuous service, you may be liable for tax. So try to avoid that. Um, 25, yeah, so the remaining 25% is locked in. Um, if you quit your job, even then it's locked in. You have to wait for 12 months, 12 months of unemployment, then you can take out the remaining 25%. So that is the scheme that they have envisaged. I mean, right now it's not yet implemented because they have just announced that decision. It will take time for it to go through the system and rules will be framed, and it could be that the final rules are different from what they've announced. So far, there was a bit of hue and cry about the 25% lock-in. So we'll have to wait and see. But directionally, this is what is supposed to happen in a few months with EPF withdrawals. Um, I already mentioned the pension. So EPS pays you pension from the age of 58. If you want it early, you can take it from the age of 50, but it gets reduced by 4% a year. Or you can defer it to the age of 60 and it gets increased by 4% a year. So it's your choice. 4% simple interest, not compounding. Pension is capped at this wonderful 7,500 rupees per month, and it is fully taxable. Um, yeah, that's it from me. Happy to take questions. Ketan, anything you'd like to add that I've missed?
I think this covers the basics, and we'll probably deep dive into the questions so that it's more specific to the audience.
Thanks, Neil, for running us through that. I already have a few questions, and everyone in the room, I mean, EPF in itself is quite a conundrum. So you can pull out your specific thoughts, use cases, be it from a case of if I have to withdraw for, say, housing, what will it look like, etc. I think we'll use this opportunity to make it now more of looking at situations. I have one. Ketan and Neil, I'm going to go one by one in the chat box. Okay, so Prasanna has a question. One clarification, is it mandatory to contribute to EPS for someone who joins EPFO during 2017 and basic salary is more than 15,000? If not mandatory, do I have the option to cancel the EPS contribution and credit the accumulated EPS back into my I guess the normal account, the EPF account?
I'm
Yeah.
gonna let
So,
Ketan. Yeah.
yes. So, Prasanna, see, if you've joined during 2017 and your basic salary was above 15,000 per month, then you don't need to contribute to EPS. Actually, you should not have contributed if the employer has deducted it. You should reach out to the company, tell them that this contribution is incorrect, and I want to move the pension money back into my provident fund. And for that, you have to the company has to actually submit a clarification letter. And there's something called as a Form 3A correction, which is basically moving the EPS back into PF. So it's a bit of a tricky process. And in practical terms, since it's a physical process, there's a lot of paperwork piling up in PF offices. So expect anywhere between 3 to 6 months time to get this corrected.
Just for the correction.
Yes, the company has to file a paper, and the PF officer has to manually add back the 1250 that might have been contributed, and also the interest every month that the money would have accrued, because PF ideally
Yeah,
gets interest and EPS
exactly.
doesn't
It
have
should
any
get
interest.
interest.
Correct. So all of that calculation is manual and tedious.
Prasanna, I hope your question is answered.
All
You're
right.
there, right?
Thank you, Neha and Ketan. So, I might need some assistance in this part. So, in this case, like, would the FinRight be able to help me as needed in case?
Absolutely. Yeah. We'll be able to help you. We'll have to get in touch after this call, and we'll figure out which PF office it is, and we'll have to schedule probably some visits and move things forward for you.
All
Happy
right.
to
Thank
help.
you.
So,
Thank you
folks,
very much.
everyone who's here, when FinRight will be able to connect with you, they have some offers that they're willing to give out for folks who've come through the Womoneysta session. I think we'll mention that before we close. But yes, anything and everything, as per my understanding, Ketan, I'm stepping forward here, but many of these challenges, I think you all will be able to handle for if there is a client who needs that support, right?
Absolutely. Yeah, we've been dealing with EPS related issues. It's fairly common, unfortunately. Yeah,
No, absolutely. I also wasn't aware. That's why, all right. Can I take it on sequence if you all don't mind? I'm gonna go. I think I had also put this question because I get this asked a lot, whether once I'm enrolled into EPS, now what happens? Let's say my salary's gone above 15,000. So like Neil mentioned a case, right? Back in the day, ho gaya kabhi. So ab kya hoga? Like,
correct.
does it keep, is it something which has to now keep happening or what?
Yeah, they have a rule. It says once a member, always a member. So you don't
Oh
have the
my
option to.
God.
Yeah, and the only
Like
catch
Hotel
here
Like
is,
Hotel
California.
California, you once you're in, you can't get out of this. Okay.
yeah, so just one small thing here. If you somehow have withdrawn the pension contributions, the way you can do it is if you have left the job and been unemployed for more than 2 months, and overall you haven't contributed, up to 9.5 years, lesser than 9.5 years to EPS,
Less than 10
and
years.
yeah, less than 10 years. So if you withdraw the funds, then the service breaks, your pension contributions break, And then when you join fresh, you can start with just EPF and move out of EPS altogether.
So bad news for the ones who like tend to
They,
stick to the corporate world for more than 10 years, right? I mean, like
yeah,
guys, come on. Get with your freedom fund and move out. Okay, jokes apart. Samantha has a question. EPF interest has not been credited in my account for last 2 years. HR says it's up to EPFO to do it. Is the interest missing for everyone?
okay. So, Samantha, I think this is unfortunate. Interest has been credited for the last financial year. So, up to 31st March 2025, the interest was credited for approximately 95% of the companies. And that was done in June or July. So, it'll be worth checking your passbook again. We'll verify. I'm happy to help, get your interest back. Ideally, it should not take so long. 2 years is a long time.
Also, Ketan or Neil, if you could just share, like, how do these folks connect with you, and if there is a service where they can have like a discovery conversation or something on those lines for them to know.
Sure, yeah. I can share the details over chat, or we can send out an email with details on how to reach out to us. And
All right, perfect.
yeah,
So, for everyone who's registered, and also, of course, the ones who are here, we will be sending you the recording link. We'll send you the details that are shared from the company, how you can connect with them, what are the options, what are the plans that they all have. So, we shall do that from our side. All right, Uma, I have a question here. How can we withdraw pension? Need to know steps. Is it through EPFO portal? Even in case of exempted trusts, I joined EPF in 2009.
okay. So, see, there are two components in case of a trust. So, a trust manages just the EPF corpus, but the pension corpus is still with EPFO, right? Since you joined back in 2009, there's a chance that the trust had not contributed to EPS. You have to figure that out and just ask your company whether or not they've contributed to EPS. Some of the trust back in the day had the option to not enroll into EPS. Later, it became mandatory for the trust to also contribute to EPS, and the money is actually lying with EPFO. So, to come back to your question, um, you have to withdraw your funds, provident fund funds from the trust, and the pension component has to be withdrawn from the EPFO portal. Now, each trust has their own mechanism for withdrawals, either through emails or through their own portal. And for EPFO, you can log into the unified portal and apply for a withdrawal from there. And since you've joined since 2009, the withdrawals is only allowed if you've contributed less than 9.5 years technically. If you've contributed for more than 9.5 years, which is counted as 10, so in that case, you will apply for a monthly pension at the age of 58, like we discussed.
All right, I
Can I
hope that
just
answers
ask
your
a
questions. I
follow-up
have
question?
Anush.
Sorry,
Yeah,
Rashmi, you're saying
Rachna.
something.
Yeah, Neha, just on this same question, I wanted to ask a follow-up. So is that okay if I can ask right now?
Yeah,
So,
sure.
since you mentioned, my question was the same, that at 58, now I have managed to pull out the entire EPF, but because of long-standing service, there was an EPS by default. I was not allowed to withdraw. Now, at the age of
Mhm.
58, what happens? I'm assuming it's not going to be happening automatically. What is the process that needs to be followed then from my end to ensure that whatever little EPS is there, at least,
Full
Correct.
7,500 you're going to get.
Right. So,
Full 7,500 you're going to get, and you will share it with me.
And is this how, so much of unclaimed money sits in that account? Because I'm sure people like me will forget about it and not go back at 58 to withdraw it, or are clueless about it at that point in time. Is that one big reason that, EPF, LIC have, these two organizations
LIC का अलग
specifically
है
have
issue.
unclaimed amount of huge chunks of money?
that's correct. See, unfortunately, the process is not automatic. There's
Okay.
nothing automatic with EPF. In fact, funnily, if you start your pension contributions, they'll stop after a few years if you don't submit a digital life certificate, and that itself might be an hassle. So you have to prove that you're alive, and then only they'll keep your pensions coming. Otherwise, that might also stop. But to coming back to your point of how do you apply, you have to go to the unified portal, and all the best. Let's hope that it works, because unfortunately, at times, that.
You make it sound like doomsday. Anyone here who's worked for more than 10 years is already like tossing and turning uncomfortably that पहले तो पैसे दो जबरदस्ती फिर वापस मिलेंगे कि नहीं, you don't know. All right, Anusha, you
No,
wanted to unmute and ask. Go for it, yeah. We have a lot of questions coming in, so I'm going to move a little fast now. Yeah, Anusha, please.
yeah.
Anusha, are you there? I can see you.
Hi. So sorry, I just had a power cut. Can you hear me?
Yes.
Okay, we'll come back to her. I'm not sure. I have a question from MM. I'm employed. Yeah, Anusha, you want to speak up? Okay.
Can you hear me? I'm so sorry.
Yes, go for it.
Yeah, so hi Neil, hi Neha, hi Ketan, good morning. Thank you for the session. So I need some help in interpreting my passbook because I just logged into the portal when Neil was talking about the EPS component, the pension component. So number one is that my basic has always been above 15,000. But I just logged in and I saw my passbook. So the employee share is 12% and the employer share is 3 point something percent. So those two values are matching, and my EPS pension just shows zero. So does that mean I've not been enrolled in EPS or like? So I'm not sure if I'm interpreting it correctly. Like, is it mandatory for me to be like enrolled in EPS since my basic is above 15? If yes, my pension column shows zero. So I'm not sure if something is wrong or how to
So
interpret that.
no. So Anusha, if you joined after 2014, 1st September 2014, and like you mentioned, your basic was above 15,000, then you are not eligible for EPS at all, and it should always be zero. So just to double check, your employee and employer share matches, right? It's equal.
Correct. And I did join after 2014.
Yeah, then it's all correct. You don't have to worry.
Oh,
You'll
okay,
keep
cool.
getting interest on it. Yeah.
Cool. Thank you.
Lucky Anusha.
Thank you.
All right, we have MM who says, I'm employed for last 15 years, contributing to EPF, my side, employer side. While I remain employed, I'd like to withdraw. Okay, that's a good question. Withdraw EPF for my son's higher education. How much can I withdraw for my son's education under the previous and now under the new rules? Can I withdraw 75% as per the new rules?
Okay, so as of now, the old rules apply. So according to the old rules, for higher education, for your son's higher education, you can withdraw 50% of the employee share. So whatever you have contributed yourself to Provident Fund, you can take out 50% of it, and you're allowed to do it 3 times. So first time, let's say you have 5 lakhs, then you'll get 2.5. Next time you apply, you'll get 1.25. So it goes that way, 50% of the remaining balance of the employee share. And for I hope that answers the question of how much can you withdraw right now, and the new rules are yet to kick in. And the new rules actually have one thing that they've done is they've increased the number of times you can withdraw for higher education. Right now, the limit for education plus marriage is total of 3. And under the new rules, they have increased it to 15, 10 for education and 5 for marriage. So if you can wait out, then probably the number of times you can withdraw is going to get increased. Although there's no clarity on how much can you withdraw under each reason, so can't comment on how much exactly will you get under the new rules.
When they increased that 5 for marriage, I was like super amused. Who gets married 5 times? This is very progressive
तो
thinking.
पूरा परिवार का निकालेंगे ना नील
Uh,
एक एक परिवार में बहुत लोग की शादी होती है Okay, I know where you're coming from. Okay, Ruchi has a question. How will pension component work if I quit now and withdraw the amount after 1 year? Good, very good question. I also, and assuming, of course, I've not reached the age of 58.
can you repeat the question again? Sorry.
How will pension component work if I quit
Mhm.
now and
Mhm.
withdraw the amount after 1 year, assuming I've not reached 58?
Okay. So if you have not contributed for 10 years, you can withdraw the pension right
The
away
whole
after two
thing can be
months.
withdrawn.
Yes, yes. You just withdraw the pension, otherwise it stays there till the age of 58. It's as
Rotting
simple as
away.
that.
Okay.
Yeah.
Okay, now we're coming to our next round. Anudeep has a question. Anu, are you here? I think I did see her in the room. Yes. I'm gonna go for this. I'm gonna read it out. Previous employer created a UN which is not linked to my Aadhaar. In this case, how do I merge my EPF accounts? Previous company has wound up its operations in India.
Okay. So again, this is fairly common. Anyone who's worked before 2014, those records are not digitized. And the question that Rachna was saying, is this pension one reason why a lot of money is on, sitting with EPF? Or the other reason is anything before 2014, the records are
2014.
not, yeah, all the records are not digitized. In fact, if you go beyond 2009, it becomes a huge hassle. All the records are in physical paper forms. You can imagine a huge rack of files piling up in EPFO. So there's a lot of money lying there. And like mentioned, the company has shut down. So in that case, what you have to do is you have to file for an offline form, which is a joint declaration form. Ideally, it has to be signed by you and the company, but the company has shut down. So you can reach out to some authorities. For example, you can go to your bank where you have your account, and the bank manager actually has to write a small clarification that they have verified the KYC details as per your bank accounts, and then you have to get it attested by them. Other authorities include a magistrate or a local MLA, someone who has an authority to sign that your KYC is actually accurate, you are who you claim to be, and you have all the documents. For example, you have to submit three documents for your KYC, for your name, gender, date of birth verification, and three documents that states that you were actually employed in that organization during that tenure. So your salary slips, your offer letter, your relieving letter, all of these have to be signed and submitted to the PF office. Again, this is an offline process and involves a lot of paperwork, and happy to help if you need help. There's anywhere between 45 days to 2 months you can expect for this process to go on.
Thanks. That's very helpful. I think, and I will surely reach out to you guys to help me
This
with.
feels like now instead of keeping jewelry in the locker, people need to start keeping their salary slips, EPF documents later so that at age 58, I remember, okay, I have this set of documents, let's
So the
go.
ones who started working before 2009, raise your hand if you were in this room. It's bad, bad news for all of us. Okay, I think it's a kind of a connected question, Samantha, as I'm gonna take it up. There are lots of questions, guys. I will try my best to go over everything today before 12. There's some EPF with a previous employer, which is pre-UA. Similar story, right? What you just mentioned. Yeah, go through the entire process of all these documents, KYC, everything, right?
Correct. You have to do the same process, the joint declaration process. Once, the underlying architecture is just linked to your Aadhaar. If once all the details are linked to your Aadhaar, you'll be able to merge them online.
That's the
So
main
the
thing.
process is to get everything linked to your Aadhaar. The old PF accounts have to be linked. Yeah.
Uh, Srinath has a question. I have some home loan balances. Want to take out my PF for closing it. I have continuous service of more than 10 years. How much can I withdraw in terms of percentage? And could you please share what are the tax implication of withdrawing from PF?
Sure. So for home purchases, you can withdraw up to 36 times your last drawn salary. So check your EPF wages column and see what's the last EPF wage contribution that you've received. 36 times that you're eligible to withdraw. Please note that under the old rules which are currently applicable, you can only do it once in a lifetime. So use this reason properly. And under the current rules or the old rules, the employer component is only available through this reason. Whatever other reasons prevail, they can only give you the employee contribution, which is what you have contributed. So the employer contribution can only be tapped using this rule. And since you've crossed 5 years of service, there's no tax on withdrawals. So you can, get up to 36 times tax free.
That's good. Tax-free withdrawal for the home loan closing. All right. Sumit has a question on applied for closure, filled up Form 10C, Form 19. However, claim is being rejected for reason wages more than 15K, non-EPS member. However, EPS deducted. I think we spoke about this.
Correct.
Please help how to close this now when I am not in contact with employer anymore.
Right.
Sumit, I think these folks will be able to help you that in summary, I
Correct.
wanted to say.
Yeah, you have to reach out to the company, unfortunately. The correction for pension can only be routed through the organization. Even though
Okay.
you've left, you have to reach out to them. And again, the same Form 3A and correction and all of that. And then post that, you will be able to withdraw your PF. Like Neil was mentioning, small error in EPS leads to rejection for your PF also.
But tell me, Ketan, like in this case for Sumit, you guys can't help. It has to again get routed through the previous employer.
So
There's no other hack here.
there's no hack per se, but in fact, figuring out what is that form. Sometimes company themselves don't know how to file that form, fill it
Okay.
properly, what kind of clarification letters needs to be sent. So we do that coordination. In fact, for an employee to understand what all processes are being done and whether or not the company documentations are correct. And then the part of it is just to submit. Post submitting those documents, it's another 3 to 6 months of following up with the PF office. So that's where we come in, understanding those documents, coordinating with the company, and then following up with EPF to get it done.
Yeah, Ketan, sorry to interrupt. I'm Sumit over here. Now,
Yeah.
actually, how rightly that lady said, now I have already put a court case against that company for my gratuity. Now they are not supposed to, cooperate me on this probably because now since I have put a court case against them, so they are going to reject my all the claims whatsoever I do. Now, is there any other way for me to, get this withdrawal, or do I?
Sumit,
Yeah.
see, from the EPF compliance standpoint, if the organization is active and is contributing to EPF, the EPF officer will reluctantly say that, this organization is active. You have to get a signature from the employer authorities. See, you can always create your own Form 3A and all of that. We can help you with that, but it still remains unclear. You will have to literally visit the office and at the mercy of the PF officer whether or not they entertain it. As far as the rules go, if the organization is live, there are no workarounds for employee. If had it been shut down or under insolvency,
But at
then
the
we would
PF
have
office,
tried.
I'm sure we mentioned something कि कोर्ट केस चल रहा है तो कुछ लीनियंसी नहीं आएगी वहां पे मतलब
See,
ट्राई करना पड़ेगा.
ट्राई करना पड़ेगा. ग्राउंड रियलिटीज हम क्या कर
Because
सकते
now
हैं
if I
सर,
do know, they'll
मतलब
try to bargain me on that. Ki bring me to court
हाँ हो
case or
सकता
something
है
of that
but
sort. So I'm just trying to understand if any other alternative is left for me to.
See, what I can suggest is probably will help you create the forms, whatever needs to be submitted to the PF office. Getting them signed by an authority is the problem. You can tell the PF officer that whenever the company comes to the PF office to visit the PF officer, they can get it signed and attested. Routing it through the EPFO officer rather
Okay,
than you
okay.
reaching out to the company, you reach out to the officer, and the officer will say that it's mandatory for you to do it. So you better get this signed and submitted. That is one way you can try.
Got that. Okay.
Yeah.
Thank you for that. Thank you very much.
all right. Lok has a question. I started getting salary in 2003 but never realized whether it was getting deducted and deposited for EPS. How can I check on the same? I think the passbook is the place to go. How can I? And also, my basic is beyond 15K. My salary slip doesn't show EPS except ENPS and ER NPS contribution. Yes.
So salary slips won't show you EPS contributions because that is part of the employer contribution. What you will see is an employee deduction for PF. And since it's 2003, more often than not, these records are not online. So even if you log into your UAN, you won't be able to see that. If you work continuously and somehow those records are online, you can verify them through the passbook. Otherwise, you have to link the old PF account to Aadhaar through the joint declaration process that we discussed, and then you'll be able to verify those records. And anyways, if you were employed before 2014, consider yourself as an EPS member. Even if your basic has increased, you will continue to be an EPS member.
मतलब बाय डिफॉल्ट हुआ होगा बट अभी
हुआ
उसमें
होगा.
क्लैरिटी नहीं है कि कितना है
हाँ,
unless he
वो
links it up and gets visibility on it.
correct. You can raise a grievance and try understanding the balance. Sometimes, if you're lucky, you'll get the balance. They'll tell you the balance, how much money is there.
Yes, Rachna.
I think I had one more scenario to check what would work better. For somebody, let's say, the EPF contribution has stopped. EPF is still active, but there is a taxation being accrued because the investment was greater than 2.5 lakh per year. Okay. Now, in such cases, the accrued interest stands withdrawal rules after a point in time are going to get tricky and tricky, right? Till they come into action. What is it that you recommend if this person says that, okay, I am okay with it, or I'm not too sure what to do? How
Mhm.
would you take, or how would you do recommendation on such cases? Would you ask them कि अभी मिल रहा है पैसा तो ले लो, 8.25% जो भी है वो, there is a taxation element every year that is getting accrued on the additional interest with not clarity, and I feel this is like a black hole further and further with new rules. Whenever they get implemented, restriction will come into withdrawal. So what would you suggest in a case like this if it comes up to you?
Sure. So, see, in this case, what you have to think about is your interest. You've stopped contributing. The PF is active. You'll continue to get interest till the age of 58.
Got it.
But like Neil mentioned on the during the session, it's going to be taxed
Hello.
at your tax slab. Whatever
Got it.
interest you're earning is getting taxed at your tax slab. So if you're in the 30% tax bracket, your effective interest rate has come down from 8.25% to somewhere in the 5.5, somewhere so in that range, right? And it doesn't make sense in that case to continue getting 5% interest. So you're better off withdrawing the funds. Currently, you have 2 month waiting period. They're going to increase it to 12 months. कल फिर क्या rule change हो जाए? It's become,
100% निकालना चाहिए, 100%.
yes, withdraw it and probably invest in other
Invest
debt
it,
instruments. Yeah, invest in other debt
100%.
instruments. If you want to continue your debt balance, put it in debt instruments that
Got
are
it.
out there.
Got
I
it.
can share one personal experience every time I quit. I don't know why. Maybe it was my young, aggressive investor mind who said, "ये 8% से क्या होगा?" I kept withdrawing. So I think that's worked for me because I changed 4 jobs, but every time I would leave, unlike the others who would say, "No, no, we must merge it, we must shift it," and I knew that, but somehow I felt कि नहीं यार, let's invest it in something else. And now I look
Yeah.
back and I feel like, wow, I mean, literally dodged a bullet there, right? So, yeah, I always feel if you're not sure of your next step, take it out, move forward. We have few more questions, guys. Can we keep moving forward? Saurav has a question. I think it's a very important one. Is VPF contribution chargeable? When I tried for VPF, my current employer said there will be admin charge per month for PF department, and monthly charge was coming to around 708 on my amount.
No, there should not be any additional admin charges. Actually, I haven't heard of it. The rules, they allow you to contribute more. For them, it's just filing another challan and submitting the money. It should not, depends on the company. But I haven't heard of, additional charges for BPF.
Maybe
Very
you'll ask him
specific
to
to,
document it and tell you what exactly is this charge, and
yeah.
because if it's not mentioned. All right, Sabyasachi has a question. Have the new rules been implemented? I want to withdraw all the amount and I'm unemployed for the past 2 months. If yes, what's the process to request them without getting rejected? Without getting
Uh,
rejected is a very important part.
so for that, see, usually when people come to us, we run a 7, 8 point checklist. It's actually also live on our website. We've created a tool for this because at times it may be intimidating, you don't know the rules and all of it, so multiple checks are there, but regardless, a basic checklist is merge all your accounts, make sure your KYC is correct, make sure your date of exit is updated, and then go for form 19 and form 10C, which is full and final withdrawals. Don't wait for the new rules. You'll have to then wait for 12 months. You have 2 months of waiting period in the old rules, which you've already fulfilled. Go for the full and final withdrawal now. Happy to help if you face any issues.
Just few more. 2005 joinee, quit employment in 25. Can EPS accumulation be transferred to EPF?
Uh,
2005
2000,
joinee.
no, 2005 joinee, you've been contributing for more than 10 years. Wait for the age of 58 and apply for a monthly pension. Take whatever you're getting from there. No option to reverse.
All right, I have a question from Natasha. I've had a terrible experience trying to withdraw my PF for 2 years. I have two UANs. I faced EPS issue you mentioned, and apparently the organizer sent the clarification letter and everything, but I've still faced a rejection. Latest update is that apparently I will have to pay some amount to the PF office to get my money. Okay, can you help? Uh, Also,
Okay.
now I've joined a new job. What should I keep in mind? Okay, yeah. So that's a good question. I think let's pick the first and then. we can move to the second.
Sure. So, again, these are the ground realities that people have to deal with. Getting your own money is a hassle. Technically, if all the documents are in order, if you have things in order, there's no need to pay over and above. It's your money, you should be able to get it. We'll have to verify whatever documents and what exactly is the case, why you're getting multiple rejections. Once that is sorted, you should be able to go through and try try using or raising CP gram grievances. That usually works, because there's going to be a physical copy of your complaint. The officer has to sign it. The senior officer authorities have to sign it. So usually that gets things in order. Try using that option. And to come to your next question, which is about what should you do now that you're joining a new organization? For anyone joining a new organization, if you want to continue your PF contributions, make sure you're providing your Aadhaar card details while you're joining. They'll be able to pull up your UN, which is existing UN. Now they've implemented systems so that you don't create multiple UNs. Earlier, that used to happen. So you'll have a single UN account, and your transfers also get auto-initiated. So at the last organization, the KYC should be accurate and your date of exit should be marked. So now, when you join the new organization, then your UN number will remain the same, and auto transfer will get initiated on your behalf. And
Hello.
yeah, Siddharth.
I think we'll keep.
Okay. Yeah. So if you want to continue, merge your PF and keep it accumulated. If you have the time before you join and 2 months have passed since your last job, try and withdraw if you're able to. Unfortunately, in this case, if you're getting too many rejections and you're not able to get funds, if your new member ID has been created, sorry, the new job once you've joined, then there is no option to withdraw the full amount. You will have to transfer it to the new one, or else you have to do partial withdrawals. Can't get out of it because the full and final withdrawal is only allowed in the last organization. So if the last organization is the new one, you're currently working there, you can't get the full funds. You'll only get partial withdrawals.
I think, Natasha, given the case, maybe you want to connect with them once and see what best can be done. All right. Folks, last two questions. I know many more. I think we just had another one joining. Sorry for that because we also have to watch time. Alok says, I've merged my PF accounts of various previous companies. Online transfer I could do for only one of the firm, but still one of my previous PF fund of one company who had trust is still not getting transferred. Is that online transfer service can only be used once or not? Alok, if you're
So
here, you can. Yeah.
yeah. So Alok, for trust, like I mentioned, there are two uh, parts of it. PF is with the trust and pension is with EPFO. So if you're an EPS member, what you have to do is you have to initiate a transfer from the EPFO portal for your pension component. And for the PF component, you have to reach out to the trust and submit a Form 13 with them to transfer your funds. And technically, earlier, if your transfer was settled once, if it's done once, you cannot apply again. Not sure if that's the case for you, but right now I'm seeing that people are able to raise transfer request online again. It should not be an issue.
And last one for today, Rajesh. Okay, we'll try to take Rajesh's. EPFO is going to issue an ATM card to withdraw our EPF. Is it true? If yes,
So
when will it happen?
a lot of PR on EPFO 3.0 and ATM withdrawals are coming. Uh, no clarity on when that is coming. We were told
Uma,
that
it's going to take a while. Let's
March,
agree on that.
April. Yeah,
Let's
March,
agree on
April
that.
was the tentative timeline, but no
अभी तो
clarity on
कुछ नहीं
that.
है ऐसा. I think ऐसा कुछ अभी तो नहीं
कुछ
है
भी नहीं है
on ground.
मतलब. Yeah, and how much can you withdraw from ATM anyway? And I don't know why people would need
हाँ
to
उस पे
withdraw
भी
there.
और फीस भी सब लगेगा. So wait, I mean I would just say अगर if like let's
Now,
wait for it to really happen.
so good thing is they've done, they've so-called implemented an auto settlement for any amount less than 5 lakhs. If you have a partial withdrawal less than 5 lakhs, it is supposed to get auto settled. Not yet 100% in force, but some do. Some lucky folks are getting less than 5 lakhs settled within 3 to 4 days also. So you can try that instead of the ATM route.
Last question of the morning, Rajesh will take it. 2016 joiner, my basic pay was less than 15K during initial period. I hope I'm part of EPS. Should I quit EPS, which would be beneficial, and only have EPF? If yes, what's the process?
So yes, if you joined in 2016, basic less than 15, you are part of EPS scheme. And as things stand, you will continue to be an EPS member. If you're in between jobs and have, any
It's
time
Hotel
period,
California. You got in, bro. You cannot get out now, Rajesh जी. आप
yes,
भी हम
अगर
सब
दो
के
महीना,
जैसे फंस गए थे. अभी आप नहीं निकल
yeah,
सकते.
only option is 2 महीना अनएम्प्लॉयमेंट अगर आप झेल सकते हैं
हाँ,
तो
ये कर सकते हो आप. जॉब छोड़ दो 2 महीने के लिए, और वो भी न्यू रूल से पहले छोड़ना है, क्योंकि वो अगर आ गए फिर आपको एक
तो
साल वेट करना पड़ेगा 25% के लिए. तो
पेंशन में 3 साल है. अंडर द न्यू रूल्स पेंशन इज फॉर 3 इयर्स. तो वो तो बिल्कुल नहीं बच पाएंगे फिर.
ओहो. Sorry. All right. All
I,
right. MM, I'm
I'm,
sorry.
I'm
I'm going to
sorry.
I'm going to bounce on this question. Okay, sorry. You have a question?
Hi, my name is Tyagarajan. I'm sorry I got disconnected in the exactly around the time my question was about to be answered. You'll see my name is TS. The question is 2005 joinee quit employment in 2025. Can EPS accumulation be transferred to EPF? I missed out on the
Uh,
response that Ketan had given.
yes. So Tyagarajan, unfortunately, you will not be able to merge your EPS
It
back
was
into
not a very
EPF.
happy response. No.
Yes. So you will have to apply for a monthly pension at the age of 58, and hopefully you'll get a decent chunk out of the 7,500 limit.
Okay. But
Yeah.
considering that EPS accumulations don't gain any interest,
Mhm.
doesn't it make sense for me to get it discounted by the percentage that you were saying? I'm currently 53. So assuming
Mhm.
that I even discount, let's say 20-25% for the 5 years that I have to start gaining this pension, doesn't it make
Mhm.
sense for me to discount it and get it now and maybe put it in a mutual fund where at least I'll have some gains?
So see, the amount that you're going to get from EPS is not going to be significant. So if you believe,
I just see my statement and currently it says some 2.25 lakhs.
you will not be getting the 2.25 lakhs upfront. You'll get a monthly pension. So every
Correct.
month you're getting a very small amount. You can obviously opt for that and put that money into an SIP and
Yeah. So
get.
4,200 is what my calculation says, eligible
Mhm.
pension.
Mhm.
Now, if I was to discount even 20% for the balance 5 years that I've got, or 20 or 25%,
Mhm.
even a 3,500 rupees I currently start getting, if I was to invest it in a mutual fund, doesn't it make better sense for me to accumulate it over another 5-7 years?
Neil, I think this makes sense, right?
Yeah.
You want to comment?
Yeah.
From a flexibility point of view, yes, because your mutual fund money, you can do whatever you want with it, whereas EPF money is locked in withdrawal. From a returns point of view, we'll have to calculate because that pension has an inbuilt interest. So the interest is not visible to you. But if you look at the formula, which is dependent on number of years of service, the pension does have that component inbuilt. So because it'll count to your number of years of service, those additional years. I'm assuming that you're still working, of course.
No, I have quit.
Oh, okay. So yeah, then it sounds like a no-brainer.
Yeah.
Yeah.
Out, you go. Move it out. Take it out. Take it out, guys. All
Yeah.
right. And a quick
Can you
one.
just, sorry, this is MM here. Can you just answer my
MM.
it's possible?
Okay, yeah.
Yeah.
They are not letting you go. Okay, last question, please. Last question. Yes, MM.
I think I put it in the chat window, please.
Should I read it out? If someone is between jobs, have built a decent corpus in EPF and EPS, is it recommended to take it out and invest in mutual funds or allowed to keep it in EPF for compounding? Can I take this, guys?
Yes.
This one's on me, Neha from Womoneysta. Yes, yes, yes. Take it out. Invest it. No brainer. Please do that.
Thank
Golden
you.
opportunity.
Thank you.
All right. I do love the EPF. Okay. It comes across as if I don't, but it's not true. It's just that I've just seen too many cases of people getting, confused and convoluted with this whole product. I would have never done this session if I had not seen it firsthand live with many of my clients. And therefore, it might sound like I'm a bit prejudiced, but thank you so much, everybody, for being here. We're going to just have a quick poll for the few who are here now remaining. Please do tell us if you enjoyed this conversation, simply because we want to know if you're on the right track, which should we do more of this or not. I'm going to launch this on your screen. Please do that. Parallelly, Samantha's going to buy me one Golgappa by the time she gets her pension. Yeah, because एक plate भी नहीं आएगा तब तक. And also for those who are new to Womoneysta, especially the ladies in the room, also the gents, of course, you can have more of your female friends and spouses, etc. I am going to just put up how you can stay connected with us. The attempt is not just to talk about things on social media, but actually to get you all real partners, real companies which are working in the space on ground to really change the way we handle our finances, help us get smarter, better, fitter with our finances. You can stay connected with us largely through our community on WhatsApp. This is women only. So please, gentlemen, send in the lady friends here. We also run courses. We have financial coaching. We are also SEBI registered, and we also do wealth management for our clients. So all of that for everyone who doesn't know about us. Thank you so much, the team at FinePrint and FinWrite for doing this. I'm going to end the poll. This was fantastic. I mean, just look at this. We'll have a lot of people, I think, connecting with you all directly for several challenges. And I do want to thank you all for personally for the work that you are doing. This is such an opaque space, needs so many more Ketans to be helping us and so many more Neils to be talking about it. So thank you so much for doing this. Appreciate. Thank you, everybody, for being
Thanks,
here.
Neha. Thanks,
Yeah.
everyone.
Thank you. Thank you, everyone, for
Thanks.
being here.
Thanks, everyone.
All right. Bye bye.
Bye bye.